All right, folks, so the script is flipped, at least for one day, right? Think about this. So we do have 7 sectors higher. The market's relatively healthy, but of course, the technology on the bottom, that's down, of course. Now, there's a sliver of hope even in there. See the green? Software, right? They're really starting to catch more and more of a bid. Now, this is the kind of session that whenever you hear commentators talk about the market, they'll say it was under pressure. But get this, 70% of large caps, 72% of mid caps, 76% of small caps are actually higher. It's a really healthy market under the surface. And I have to say, I think today's session is very bullish when I see this kind of things. In fact, a 4% jump in names now above their 50-day moving average. So remember, we want broader participation. And don't look now, but remember on Friday, talked about this service now. At one point, it was the #1 stock in the market. It's the #2 stock in the market. Remember, President Trump's been loading up on this bad boy too, but we talk about it a lot on this show. Of course, all of this comes at the expense of hardware, profit taking there. But here's the good thing. People are taking profits and rotating back into other things, looking for fresh ideas and not hiding out on the sidelines. Now, there's a chance, of course, hardware names will trade sideways, maybe more profit taking ahead of Nvidia's earnings report on Wednesday. And this is what you have to think about. Yeah, they're going to crush it. We know that already, but the last 7 times they've reported, a week later, 6 times the stock was down, sometimes down a lot. I'm going to bring in now founder and CEO of Goalvest Advisory, Sevasti Balafas. And first of all, I want to say congratulations. And USA Today named one of the top wealth managers in New York. How does it feel?
Thank you. It feels great to get that recognition. I appreciate that.
Yeah, congratulations.
Yeah.
So let's talk about this. So Barron's has an article today online that says how Nvidia stock could hit 300 after earnings. It could, but that hasn't necessarily been the case. How do you handle something where it's a great company, the numbers are always good, but the stock typically goes down?
It does, and it could happen again. I mean, it's the biggest company out there, right? We have to have exposure, and we do have exposure for our clients. At the same time, you mentioned it, they're going to crush it. We know they're going to crush it. But we can't lose sight of the fact that there are risks out there. Today has been a good day, but interest rates are up, inflation is up, Strait of Hormuz still not figured out. So I think this is a good time to take some profits, or you might see some of that from Nvidia. Right. So we could see the stock price down. That doesn't worry us. We're looking for stocks that are down to buy into.
And the long-term story, right? This is one of the slides from Jensen. We're early, 1,000 times more compute will be needed. I mean, the numbers are really, I started the show with just a mind-boggling graph, right? But it doesn't mean the market will go up in a straight line to match this.
Yeah, the market will not go up in a straight line, but if we're long-term investors, which we are, these are names we want to buy into. Never mind the backlog, the upgrade, and I see it mentioned here, the AI agentic upgrade, but also there's a cost component too, right? These big mega scalers do have to switch their chips, and I think that's going to happen. So in the near term, you see some volatility. We might see a pullback from Nvidia, but this is an early innings AI story. So this is one of the names we're holding for the long run.
I read where you made some changes to your portfolio with a macro futures overlay. How does that work?
Yes, okay, so I want to stay in the game. I want to stay in equities. Unless one of my clients has a cash need, we talk about that separately. But for everyone else, I want to stay in the game. I want to be in equities. At the same time, I do think there's going to be some volatility because of some of the reasons that I mentioned earlier. So basically, we're not removing or reducing equity exposure, but we do have a macro futures forward-looking or trend-following strategy. It's futures-based, basically, so that if equities do pull back, there's a way for us to actually perform and have a positive performance versus just take the negative.
I want to ask you about software. So we're making this move. First, it looked like a dead cat bounce. We took out the initial bounce in March. We finally broke through that. We're above the 200-day. How much, because you talked about opportunity already.
Yeah.
When you see something like this, do you start to say, okay, maybe this is where we want to start to get a greater exposure?
Yes, but not broadly. And I think there's a bifurcation happening in software. And I know you know that too, but there's a bifurcation happening. So we are looking closely at certain names, and there's going to be a difference between consumption-based pricing or seat-based pricing.
To that point, Cloudflare is a name you like.
Exactly.
Pulled back from a perfect double top. That right there shows you there was some good news. The street liked it. The pullback, which is fine. This, in your mind, is probably a great entry price.
That's exactly it. So I'm looking at names that are going to be leaders for the long run. They will be, and they had a recent pullback because of the announcement of the workforce, 20% of their workforce that they're laying off, and potential complications with that. But this is a good entry point for us.
So I'm not sure, you're too young. Well, you're actually too young to remember, but California Dreamin' was the #1 song in America in 1966. That also happened to be the last time Berkshire Hathaway bought a department store stock until now. So Greg Abel, he wants to be different, I guess, and make his mark. He bought some Macy's. Now, last time you were on, you liked Berkshire Hathaway. You like the stock, but do you like that kind of a move?
So I think there's a real estate play there, so I'm open and willing to see what's coming next. Yes, I still do like Berkshire, and they still have their large cash position. So going back to staying invested, but also being opportunistic, their big cash position helps them do that. But Macy's, I think, is partly real estate play.
Okay, so the big cash position, though, for a lot of folks is a signal that they're looking for a massive move to the downside. But they've had this big cash position for a long time, too. They can get away with it with yields where they are, though.
They can. Yeah, exactly. That's true. But I think they're patient. They've shown that. I mean, they're patient. They have cash. But at the same time, they've made some pretty big moves recently where they concentrated their portfolio. So I think having dry powder for them is great.
Bottom line, though, you're riding in this market. You're staying mostly invested.
Mostly invested. Unless my clients need cash, I put that to the side. Invested.
Congratulations again.
Thank you.
All right, folks.